Hey everyone, it's Matt Corcoran. Thanks for the feedback, the questions that you sent in last week. It gave me a great starting point. Got a better idea of what's keeping you up at night and what questions you have. One question that surprised me and I didn't see coming was the question on utility services and how those are addressed in a policy. So utility services, business income from utility service is typically a covered peril or covered claim. The red flag is that overhead utility wires are usually excluded. Or if you have them, the limit is significantly lower than what the company is offering for other utility services. So essentially, what the insurance company is doing is they're only covering the utility services that are buried in the ground, which, as you can imagine, really isn't a lot of risk. I mean, granted, if you're earthquake prone, you could have that risk, but earthquake's a whole other issue. So the first thing you want to ask your broker about utility services, are overhead wires covered and at what limit? Because you want to make sure it's the same limit as the other perils or the other buried services. The other thing you want to make sure is that perishable goods are covered. So if you lose power and your fridges go down and you've got perishable goods in there and they're spoiled, you want to make sure you have business income coverage for that loss. So those are the two things you want to do when it comes to overhead or utility service interruption. Make sure overhead wires are covered and make sure you have coverage for perishable goods. If you have both of those, you should be all set to go. But more often than not, they're not covered. Keep your questions coming. I'll be sure to answer them in a future episode, and I look forward to getting more feedback from you guys. Take care.